Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good day, all. Ira Epstein of Linn Associates with your financial market update for this day of the State of the Union address. It is Tuesday, and it is the 5th of February, 2019, just after 3:15 p.m. So we're sitting here waiting for the stock indices to reopen. They all had a great day to the upside again, acting well. The laggard of the day was the Russell. The other indices were the stronger of the group. The dollar came back, rallied, while most currencies fell against it. Metals are marking time with the exception of copper and the palladium, which are probably hopeful that something good happens in the next 10 days as the president is due to soon meet again with President Xi of China, and we'll see what goes on there. But tonight, that's going to be the show. Can you imagine Miss Pelosi behind the president? I doubt we're going to see her applauding him, but it would be interesting, wouldn't it? We'll see what goes on there. And of course, will the president tonight announce a national emergency on the border wall? I think that's highly unlikely. He has a free bite of the apple by waiting until Friday and seeing what the House Senate committee that's supposed to create the new budget that's got to be presented to him comes up with. Will there be funding in that? That's when he can react if he wants to. By the way, are you aware that they moved a bunch of heavy equipment to the border wall and they're starting work again? Finally, those funds that already had been committed are being used. On our weekly area chart of closes, you can't say anything but what a heck of a rally this has been in the market. It began on Christmas Eve. It hasn't let up yet. You're up for the week, 27 points. You haven't taken out these old highs of 27.50, but the market has certainly made one heck of a rally here, and you can see what it's done. So those that were looking on Fibonacci numbers, they're still saying, the market won't get up and take out these highs back here. I don't know. I do know the market has been one-sided again. And at the same time that that's happened, the VIX has been falling, by the way. As you can see here, you've had the pattern of higher lows, higher highs, but this is not new. You've been in that pattern for quite a while. The market has stayed over the important 18-day moving average of closes, and now what's happened on this rally is this number has finally moved above the previous swing line low of 26.22. I have not given up that this is a general resistance area where the 100-day moving average of closes is, because it ties in with the upper Bollinger Band. Remember the theory of the 200-day average. The Bollinger Bands, it's riding right here. Do you see this black dash band? Right there. That is the 200-day. So I'm looking for the resistance of the market to show in between right here, the 100-day, the upper Bollinger Band, and if it can swing up to the 200-day. That doesn't mean it just doesn't blast through it. These markets have been pretty crazy. But what a dramatic comeback if you look at the size of this break from the beginning of December down late into the month, and you've made that up. A lot of people are just sitting there going, what's going on in this market? Why did that happen and we come back that way? You still have the bullish embedded reading. Remember, momentum can go oversold, overbought, and then it can convert itself. It either corrects overbought or oversold, or it converts. And when it converts like it did here, it means both the K and D lines that make up this momentum index go over 80 and stay there, the market tends to do what? Climb. Now, you did lose that reading for a little bit. You lost it on this day and this. Normally, that means price and the 18-day average come together. The word is normally, not all the time. And once it cleared these highs, it said, no, that isn't going to happen, because you have to have a rule that counters the other rules. And that's exactly what has been happening. And you caught a group of people here with that, and that's still the mode that you're in. You're in that mode in the NASDAQ. you can see that you went up, and barring today, you've been fighting this battle between the upper Bollinger Band and the 100-day average in an uptrend. We have not been in a downtrend, we've been in an uptrend. Now, if it clears this number, then the only other number I have as resistance is the big 200-day moving average that a lot of stock traders watch. And like in the S&P, that might be where this heads. When I come to the Dow, you had already cleared the 200-day yesterday, which left the Bollinger Band as resistance. You went up to that number and you ran into a wall today. But again, you have the embedded reading, and in the Russell, you're embedded and up to the 100-day in that number. All have been in uptrends. I don't think anyone's saying they're not. The question, of course, is, are they getting ahead of themselves with these moving averages and Bollinger Bands? We'll find out. But it has been the climb of wall, if you will, that worry wall. When did this all happen? This whole leg took place with the Federal Reserve giving us a change of stance. Any way you want to say it, the Fed's got the markets back. It came in after this big break, and the market has been able to recover since then. The VIX is riding the lower Bollinger Band down into what I showed you yesterday, the top level of where you spent a good part of the resistance of 2018. So we're approaching that. The bond market is still bullish. It today got back over the 18-day average, so the pattern is at least still one of higher lows, certainly higher highs. You've stopped the downside momentum. This is what you were looking like, and you reversed that today. You didn't turn the momentum up. You've stalled the momentum. So going home, the market still got a pattern of higher lows, higher highs, resistance back at 146.11, and support at the 18-day average of closes. In the 10-year note, it's identical. You've got the higher lows, higher highs, resistance up here, support at the 18-day average. We'll see if the markets give up on that. In TLT, the popular ETF of these interest rate instruments, you have a lower low, higher high. What's very clear is all this sideways action. What's very clear is you lost that downside momentum today. It can all come back after the State of the Union. I don't know what to expect, and I don't think other people do. But what we are getting is we're getting a lot more fundamental information coming out of the government, and it's giving us some ideas as to how the economy is doing, better than having the government shut down. Where I was surprised today was the dollar index, which is one of the better trending markets too, by the way, over time. Lower highs, lower lows. Momentum had stalled out. You rallied back into resistance yesterday of the 100-day average in the 18. For the bears to have maintained control, I don't think 95.69 should have been taken out, and it was, and the market hasn't really looked back. It's up at 95.82.5. It's negated the downtrend. I don't know that it's begun an uptrend, but momentum is up and bias is up. The trend is not there. You've got a lower low, higher high. Euro currency broke through this previous break low today. So like the dollar, it first went and fought its battle at the 18-day average. Yesterday was one of these, is it going to be able to hold or not? The key was not to get through this 114.51 level. It did, and it hasn't done anything. So on rallies, resistance is back here, but you've stepped out of the trend. You have downside bias. Momentum is trying to turn down as well. In the British pound, I feel pretty relieved. Whenever you lose an embedded reading, here you see both numbers are still staying over the 80s. When you lose it, often, price is telling you it wants to get back to the 18-day average of closes. What I don't want to see are these recent highs taken out if that's going to occur. Yesterday, the market, day 2 of losing the embedded reading. In theory, I'm going to look now for the support to come in at 130.16 to the 100-day average. There you go today. So you had lost the uptrend. I don't know that you'd want to be short. That's up to you, of course. I don't tell you what to buy or sell. I talk momentum here more than anything. And you've accomplished the downside target. Yen did the same thing. In its own way, it got up here once. And if you take a look back over here, it had lost everything. And it hasn't recouped itself. It got down finally to the Bollinger Band. It's sort of run out of steam at that point. In Bitcoin, if my idea is right, Momentum was lost to the downside right here. So I wouldn't be surprised if you make a run attempt at the 18-day average of closes. What should not happen is taken out this low. If that's taken out, then the market's saying, as much as momentum to the downside's lost, we're not ready to go up. So it's very important to keep your eye on what's going to happen there. By the way, I think Bitcoin has lost its volume, its appeal, just my own thing. If this is all they can do with volume after a year of trading, I'm not impressed. In Brent versus WTI crude, you're back to the resistance of that 18-day average of closes. Market's just holding there. And it was an interesting piece of news today. Are you aware that the Saudis came out and in the Wall Street Journal are talking of creating an alliance with Russia and 10 other OPEC members? There's 15 members of OPEC. We're the other 4 if they're one of the 15 of it. Are they just letting them loose and there's going to be this new alliance that Russia leads? Read the Journal. I was surprised to read that today, but who knows? Well, here's what I see. My eyes go right here and I start jumping like this because it's like a spring in a pipe. It's getting ready to go one way or the other. You won't keep churning like that indefinitely. Momentum is going nowhere. You've run into the Bollinger Band resistance. You've got the same thing in the WTI. Momentum's actually turned down there ahead of price. Do you break out to the upside or what goes on right here? You got the same pattern in the gasoline market, not in the nat gas. Notice how nat gas has slipped down here. It has the embedded reading. My sign that the market will run out of this downside will come with the red line getting over 20, and then you'll hear me broken like a record. I'm looking for the 18-day average. Until that occurs, no. You've got a downtrend in place that has actually gotten stronger, not weaker for the moment at least. You know, one of the things we do as a commodity firm is we write for commodity traders. I talk to people all the time and they'll have an account at some firm that I can get this commission really dirt cheap. Of course you can. We're not that much more expensive, but we're not the cheapest on the street because we offer services, lots of services. We offer a lot of research because that's what a lot of our traders want. That's our profile. So here you are with the USDA reporting all these different parts again. We're going to have reports galore. What do you do with them? Where do you go with these? You got the State of the Union tonight. You can read about that anywhere, but you're not going to read about soybean exports anywhere. You're not going to read necessarily what the copper producers are doing and where they're at. You got to find somebody that can talk the language. I think we do a pretty good job of it. How do you get this information? It's easy. If you have a trading account with us, it's obviously included. You get my research. You can get that. Or you can get a trial if you haven't had one. Simply give us a call. You can go to our website. You'll see a carousel of free offers. Click on that or click up here and away you go. In the meantime, I'm going home for a good dinner, getting ready for the State of the Union, trying to figure out if it's going to be 40 minutes or an hour, and we'll see what the president says and, of course, how everybody in the audience reacts. You have a good day. I'm Ira Epstein.